Hello guys and welcome back. Today we are going to be speaking about investments, investing in your business, getting investors, etc. So today I am joined with the lovely Bukiie Smart. So Bukiie, can you just introduce yourself and just let us know a little bit about you?
Yeah, well, first of all, thank you for having me.
Thank you.
Great to be here. Like you said, my name is Bukiie Smart. I do a couple of different things. So my day job is I work in accounting advisory, advising clients, and then I also run Safe Spend Invest, which is a personal finance platform for millennials to sort of learn how to grow their money, save your money, invest your money. And then recently I started a fashion rental house. Just so that you can sort of consume fashion more sustainably, and for me it was important to not just keep spending money just buying clothes all the time. So yeah, that's what I do.
Thank you. So we've got a lot to go into today, and she's got all the knowledge for us. The first thing I wanted to discuss was, why should entrepreneurs invest their money? Why and what ways can they do that?
Yeah. I think it's really important that just generally everyone, but especially entrepreneurs, sort of invest so that you're planning to secure your future. And I know that's not something that's intuitive, because as an entrepreneur, especially if you're a creative one, you just want to spend money on the business. You're not really thinking if this doesn't work out. There's no if. It's it has to work out, right? And for me, I always say it's better to plan for the worst than to get there and sort of realize you're not ready. And so how I always think about this is take care of yourself today so that you can also take care of yourself tomorrow.
Amazing.
And so if you're taking care of yourself today, you have to be, investing in your brand and your business. That's important. But then also for tomorrow, you need to think about investing in stocks, real estate, and just other investment accounts where anything should happen to your business, you have something to fall back on. It's almost like an insurance. That's how I like to think about it. And like I said, everyone, but especially entrepreneurs, need to be thinking about that.
I like that. So I mean, you've already kind of alluded to some of the things that people can invest in, but can you give us some examples of the type of things that people should invest their money in?
Yeah, so when it comes to investing, there are a couple of different asset classes. Stocks and shares is one of them, which is basically buying stocks in a company, usually public companies. And what that really means on a very basic level is you're just taking a slice of that company, and if that company does well, then your money would also do well. So if you're investing in companies like Apple or Amazon, or even just basic companies that you use every day British Gas and things like that, if those companies do well and you can usually look at the historic returns, then your money would also do well. You have to think about other asset classes to sort of diversify, real estate, which used to require lots of capital to get into, but now you have funds where you can actually invest with other investors and buy a property, and then buy and sell those shares within the property, or you can actually pay cash and become a landlord if you want to go that route. You can also think about bonds, which are low risk, and it's basically when the government is looking for money, right? With everything going on now, the government is looking for money, and they're okay, who are private individuals who have money, who can borrow the government money, and so it's safe and risk averse because the government is structured and it's almost guaranteed to give you back the money, and then they would give you a little bit of interest in return for that. So the first thing I usually say is go online and take a risk personality test. This will tell you if you're a high risk person, i.e. invest majority of your money into stocks and shares and higher risk assets, or you might be medium to low risk, and at that point you want to stick to things like bonds and cash ISAs and things like that. And so once you know where you are on the spectrum, you then also have to decide am I the kind of person who wants to get involved with this investment account, right? Because that will determine if, like you said, you're going to go look for an investment manager, or you're going to manage it yourself. And these days they've democratized the whole thing so that it's easy for you to manage it, but I know that some people don't even want that pressure at all. They're just who can I pay to handle my business? But so it's important that you sort of know am I going to be an active investor, doing all the research, keeping up with all the companies, and making investment decisions based on your research, which is time consuming, but it's also, I think, super relevant and important that you know what you're invested into, and when the market's sort of going up and down, especially as it has this year, you can make decisions off that. And of course, an investment manager is great because they have experience. They're also working for like multiple clients as well. They probably have industry knowledge that you probably may not have, but they are more expensive because they will take fees. If you're passive, that's when you want to look at like a Hargreaves Lansdown, or like you said, Nutmeg, where they're just helping you out to invest your money. Otherwise, you want to, if you're going to be the one like making those decisions yourself, then there's like a completely different sort of investment types that you can then look at.
Okay, awesome, amazing. So I mean, with these investments we're talking about, those are individuals as entrepreneurs investing their money in public companies. Yeah. So as an entrepreneur who owns a private company, I just want to shift gears a little bit and just talk about actually having people invest in your own business, because your business isn't public, so people can't just buy stocks and stuff like that. But you know, I think for starters, it's good to highlight the fact that not everybody needs to get an investor for their business, and you really need to understand where your business is going, where you want your business, kind of what your vision for your business is. But in terms of actually getting an investor, what's the reason behind it? You know, is it for your business growth? Because sometimes you do need it. If you want to grow your business to a certain level, you can't be the only one that funds the business. You do need investors. So, I mean, why would you say that people should get investors for their own business?
Yeah, I had a phrase, I think it was by my mentor, if I'm not mistaken, or like a book or something I read, where they basically said like it's easier to protect yourself when you're dealing with other people's money, which I thought was so interesting, right? And again, it's almost counterintuitive because you as an entrepreneur, you just want to put everything you have, but then when you're and I found this to be true for myself, when you're dealing with your own money, you're a little bit irrational in how you spend. You know, you're not really thinking about each thing you want to spend. You're just like, oh, I have money, I'm going to spend it on this, I'm going to spend it on that. But if you're investing with other people's money, you think about things differently. You're thinking like, okay, this investor has given me £1,000 and you know, I want to give them £2,000 back. How am I going to do that? What decision? So you're a bit more logical in thinking that. And I think that's important because it sort of gets you, it gives you perspectives, right? It gets you out of your own head and out of feeling like this is just my little thing, and puts you in the mind of like a CEO and think, okay, how am I going to actually return the profits to the people who have invested into me?
Yeah, we have angel investors, we have venture capitalists, and we have private equity. So can you just elaborate on like the different types and what you think the pros and cons will be for investing or getting such investors?
Yeah, I think it's important to even know that not everybody can get all of those things.
Okay.
I think when you think about investing, you just think of what are my options, I'm going to go after each one, but there are many differences. So I'll sort of go backwards. So private equity and venture capitalists usually invest in businesses that can return them, I think they say like 100 times. 100 times, wow. Which means if you're putting in, again, you know, £1,000, they want to be able to get, you know, hundreds of thousands of pounds back, which is not a bad like ambition to go after, but certain businesses aren't like poised for that. Certain businesses are like lifestyle businesses, businesses you probably want to have just within your family. And so because of that, not everybody can actually access VC money or private equity. Usually private equity actually tend to buy large companies and either like turn them around into like something else, or like almost break them up a little bit to then get profits off like different elements. So again, that might not be for everybody. Angels usually are the ones that are for everybody, because angels can be literally like, you can be an angel to your business. Your parents, your family, your friends are angels, and that's usually more accessible. And with angels, they might be looking for like 10 to 50 times, which is a lot more accessible to people. People are like, okay, I can do that. If you give me this money, I can probably build the team, build the product, and actually turn it around for you. That it makes sense.
I like that. I think another thing to point out is that venture capitalists and private equity investors, they're more focused on companies that have actually been around and have a track record of their turnover and their revenue. So they are making a more like informed risk, so to speak.
Yeah.
As opposed to angels who are more open to companies that are literally just starting up.
Yeah.
So I think it's also important to know where your business is at, and you know, if you can actually show and prove that you do have that record of turning over and making that amount of revenue.
A lot of the time when you've gotten angel investments, and especially if you then decide like, okay, this is actually $1 billion company, £1 billion company, you can then go on to VC, or you can then go on to private equity. So it doesn't just like, it's not just one thing that you stop there. You build, you know, you get some angel investments to build a product, in a sense, build a team, and then when you scale up to a point where VCs can look at you, like you said, with attraction, and you know, you've gotten some revenue, they're like, okay, they've lessened their risk, because angels are the ones taking that initial risk. Right? With VCs, they're like, okay, somebody else has taken on the risk, and you've been able to prove that. Now we're ready to sort of take you on.
Makes sense. So I mean, it's all well and good us talking about these things that are available to people. But how do people actually go about getting an investor? Is there a specific way that they need to position themselves? You know, how would we say people need to go about it? Or should? And I mean, you're currently in the process. So I mean, you can talk to us about it from a personal standpoint.
It's hard to be like very, very blunt. And I think if you don't come into the industry in terms of fundraising with like an awareness of what is going on, you'll be very like thrown off, which is what happened to me. Like I had read about it here and there, but it's until you actually start going through it, you're like, oh, this is really hard, because it's hard to get people, especially out, even within your family and friends. I think it's still really hard if you're fundraising even 10K to 100K, and now people are raising up to $1 million. You know, which for some people just sounds like who is giving me $1 million? But exactly, that's the point, right? But that, if that's the amount that you need to grow your business, you have to go.
And there are people out there that have that money to give, to invest, because they're going to get a return anyway.
Yeah, absolutely. And like you said, there is capital. That's one thing I've had to sort of like shift my mind to think like, although the process is hard in terms of finding them and pitching them and getting your business and yourself ready to receive investments, there is capital available. So for me, the first thing I had to do was sort of like start putting myself in the right networks, which is actually relatively straightforward now, because there's lots of like sort of startup groups and different community groups where basically if you're growing a business, they sort of give you the infrastructure and they sort of open you up as well to their own networks. So they would have the partnerships with like angels or VCs that they could also introduce you to. And that's probably the biggest thing, right? When you're getting money, you need to know where you need to be. You need to know who is in the room, how can I get access to that room, who are the people that would be interested in giving me money for this particular type of business. Because even though there's capital, some people will be like, we only prefer to give money to people in this industry, like the tech industry or the fashion industry or the events industry. Like a couple of them are quite segmented, whereas others are just like, oh, if you're a great founder and if you have a great product, then we can give you money. And so once you then find those like networks of people, make a list. That's so important, and that's something that I did probably from day one. I was like, okay, let me just start putting names, because they tell you, and it actually is true, that with raising money you could probably get 10 no's for 1 yes.
Oh wow.
So it can be quite hard. It can be quite hard.
Brace yourself,
you have
ready.
to, and so it's important that you don't think, oh, I found 5 people and those 5 people will give you money. Maybe one of those 5 people or none. So you have to make a really long list. And then when you do that, you sort of start making like the profiles for them. So look at the companies they've invested in before, look at if they'll be a good enough fit for you, because there's no point in making like a 50-person list and out of those only 10 people invest in companies that are similar to yours, right? And then even within those 10, you have to see like, okay, do they invest at the stage I'm at? If you only have like a product that has just been launched and maybe hasn't gotten a lot of customers, there's a certain kind of investors that would invest in that. Or if you've been in the business for a while, like a year, and you've been making some revenue, then that probably opens you up more to more people. And so within that list that you have, which is your base, you then start sectioning and saying, okay, this is who I think would be a great fit for the business, and they've invested in similar companies, and I think that they'll be interested. And because of where I'm at in my business, either like I have an idea and I've created a product, or I've been in this business for a year, then you can start to reach out to them. And you can do this on like LinkedIn or emails, but they usually say like the best way to reach another investor is through a company they've actually invested in before.
Okay, so they would make an introduction.
Yeah.
Okay.
So if they've invested in a company before, find like the founder or a member of the founding team and be like, oh, we noticed, these guys invested in you. We're trying to get similar investments. Can you like look at our pitch deck and see if you'd be willing to give us an introduction? Because these guys get a lot of inbound. These guys are getting, emails and outreach from all over. So essentially, you going through someone they already know and have invested in before is like a fast track.
Okay.
And so that's really how the process works. But like I said, you just have to brace yourself, because they will go through, all the sections of the business that you may not have like known in detail. And so it's important to sort of make sure you're prepared as an entrepreneur. Make sure that you know the ins and outs of your businesses. The last thing you want is to get to a stage where an investor is actually interested and they're asking you questions and you can't tell them. They're asking you, so how much revenue did you make this month? How much do you expect to make next month? And you're sort of like, well, I think, it doesn't sort of look good, because they're like, we're already taking a risk giving you money. If you're not confident in your business, how are you going to deliver?
Yeah. That's important, and your business plan as well actually needs to be rock solid, because they will go through everything. They need to be sure that where they're in, they need to know where they're putting their money, and they need to be sure about that. I think another thing to actually just highlight is that I do think that sometimes we might feel like this person is interested in giving me money, and we get excited about that, but not all money is good money, in the sense that not every investor is for you. Like you really, and this ties into your business plan, that you need to know your vision for your business and your mission for your business, and be able to articulate that and communicate that with the investors. And if you feel like they're not in line with that, or their values are not in line with yours, then you don't have to take their money. Like there will be somebody out there that can invest in your business, somebody else out there. So I think that's also something important to highlight. And once you've got the investment, how does the relationship work? Do they become shareholders in your business? Do they have an influence in the decision-making process? Like, is that also something that you can manage from the onset? Like, okay, you're investing in this business, but this is how much like influence you have, or how do you manage that relationship with investors?
Yeah, that's a really good question, and that's something that, again, founders probably don't think about. They just think, oh, great, I've gotten some money. But it's important to know even just how that relationship is going to work, and it sort of depends on like what stage you are in the business, and also how much equity the investor has taken. So I think apart from maybe your immediate family and friends, almost every other investment you're going to get is going to take a portion of your company. So that you're 100%, right? If you're the solo founder, your 100% is going to start going down the more money that you raise. And so you will probably continue to be the majority shareholder until a point where you're diluted past 50%, which is like much later on in the business, right? But those initial stages where you're giving out like 10 or 20%, so you're still the majority shareholder, which means you still make most of the decisions. What might happen is an investor might be coming on board, and they might be on your advisory board now, and so they might then have a say in the business. And although because you're majority, you can still sign off on it, you want to manage that relationship, because if you want to make a business decision and you bring it to the board and you ask them what they think, and they're like, no, we don't think you should do it, and you're like, well, I'm the majority shareholder, so I'm going to go ahead and do it. In future, when you're actually probably looking for more investments, they are actually likely to be the first people that you would call or look into, right? Because they've given you some money before, they can probably do it again, or even introduce you to other people. But if you don't manage that relationship properly, and you're just like, yeah, well, you're not taking your money, I can do whatever I want, then you're going to get stuck. So I think you sort of have to find the balance, and which is why I think it's important to talk to other founders who have gotten investments and possibly gotten investment from those investors as well, because then you understand like, okay, how are they when you want to make a business decision? Are they like super involved, which some of them can decide that they want to be, and that's something that you guys would also like talk about and figure out before you hopefully get the money. Is like, okay, how do you want to communicate? Some investors might say like, oh, I want to be on your board because I'm actually interested in the business. I want to see what's going on. Some are like, just take the money, you can do whatever you want. But it's important to sort of define that. I think usually they say that it's good to give like monthly company updates to the investors, just so they're aware how you're of course spending their money and how you're also doing in the business. And that sort of gives you a chance to sort of say, this is, these are the targets I've been able to meet, these are the ones that we've not, and if you need any more help. So if you're like, I'm running out of money, like, I need someone to help, they can reach out quite early on and be like, okay, let's slow down, let's take a step back. But yeah, that's something that you should probably discuss before you get the money, rather than after you get the money.
I like that. That's important before you sign those papers.
Know what you're signing yourself into.
My last question is actually, as entrepreneurs who actually want to invest in other businesses, what things would you say people should look out for in the type of businesses that they personally would want to invest their money in?
Yeah, that's a great question. I think you need to put yourself in the mindset of, I'm investing to get back a return, right? So even if it's a friend, even if it's a family member, you're not given free cash, and you shouldn't sort of look at it like, yeah, I'm just going to give you $5,000 and that's the end of it. It's like, what is that $5,000 going to do? What do you want it to do? Do you want it to give you 10 grand? Do you want it to give you 7? Do you want it to be paid back slowly, without interest, with interest, right? And when you sort of define your goals, then you can start saying like, okay, what companies align with those goals? Because there's some companies that would grow slowly, in terms of they might not start having like loads of revenue upfront whilst they're sort of developing the product, and so those companies might be better off giving you cash maybe incrementally, like as the business grows. There's some companies that would grow a lot and like be raising funding again 6 months after you've given them money, which then is great for you. So you're like, okay, at that point your money might have a chance to make more money in the future rounds, and so I guess it's just important to then look at like how the company is doing so far. Like all the things we said, like what is the company's vision? What is the company's mission? Who are the people on the team? What are the employees saying about that company? What are the customers saying about that company? Because a lot of founders will tell you things you want to hear. A lot of founders are like super enthusiastic and they're like, yeah, we can do 100 grand in revenue in 2 months. Like that's so easy. But like you look at their record and it's like, you've only done 5 grand in 6 months. So like how are you going to get there? And just really like doing your research. Essentially, you're putting yourself in the investment chair, right? So all the things that, if you already have experience of, pitching and getting investment feedback, then you can use the same questions to ask, other founders and say like, where do you see yourself in 5 years? How are you going to get there? What's your marketing strategy? What's your hiring strategy? Where do you need help? What are you guys' strengths? What are your weaknesses? And just all of those things. But you have to be very comfortable with your answers. If you're going to, put your own money into any business, it's a risk, and you need to be comfortable with that risk. You need to sort of look yourself in the mirror and be like, if I lose this money, am I okay? Am I going to be able to sleep at night? And don't invest more than your means. I always say to people, like, even on a personal level and on an entrepreneurial level, like you don't want to be putting money that you need. You don't want to have an emergency and you're like, oh, how am I going to get this cash back from this company? Because that's messing with the future of the company. So it's important that you have like a holistic, wholesome view before actually deciding to give cash.
Thank you so much, Bukiie. So I think just to round off, we've learned a lot from this episode, but as Bukiie said, it's important for us as individuals to actually make investments, on a personal level, look to the future, longevity of your money, and like she just said, actually do not invest more than your means, because when it comes to investments, it's not just you put the money in and you get your returns in the next 2 weeks. It's actually it's a long-term commitment, and obviously the longer you have your money in there, the more money you make. I think also as an entrepreneur, if you are looking for investors, it's also important to know how to position yourself. to be able to actually get them, and also know that it also is a long process. So get yourself ready for that and get your your business and your books in order for that. But thank you so much for joining us today and actually sharing these amazing tips with us. If people want to reach you, where can they find you?
I probably hang out mostly on Instagram.
Okay.
So I'm at Bukiie Smart on Instagram, which is BUKIIE, and then Safe Spend Invest as well as on Instagram. We do lots of like videos and engaging posts as well, and educational stuff, and that's Safe Spend Invest on Instagram. And then Adaya House, which is my fashion house, is at Adaya House on Instagram. That's ADAYA House, HOUSE on Instagram.
Thank you. Thank you so much, and thank you for watching.